Greetings to everybody who are watching this lecture. We'll start with the cash flow statement. Questions such as direct method and indirect method basis, trap questions in exams, and format of cash flow statement under direct method will be addressed. Cash flow represents inflow and outflow of cash and cash equivalents from operating activities, investing activities, and financing activities. What transactions are included in operating activity? All cash and bank transactions which are related to principal revenue generating and residual activities will fall under operating activity. What transactions are included in investing activity? All cash and bank transaction which are related to fixed assets or property, plant and equipment and investment falls under investing activity. What transactions are included in financing activity? All cash and bank transaction which are related with share capital and loans. Now before we move deeper into the concept, I would ask you to think about various cash flows. Think about business organizations. What are the possibilities of cash flows? Cash sales is an inflow or an outflow? It's an inflow. Collection from debtors, inflow. Cash purchases, outflow. Payment to creditors, outflow. Sale of asset, inflow. Purchase of asset, outflow. Sale of investment, inflow. Purchase of investment, outflow. Interest received or dividend received or rent received is an inflow. Interest or dividend paid is an outflow. Loan taken, an inflow. Loan paid, outflow. With respect to operating activities, there are two methods. One is direct method and other one is indirect method. Direct method is mandatory for insurance companies, whereas indirect method is mandatory for listed companies. For other entities, it's choice. First, we will study basics. Direct method, cash book is the basis. For indirect method, profit and loss account and balance sheet is basis for indirect method. Now, I will ask simple and very simple question. What is the basic difference between cash book and profit and loss account? It is like in 12th standard or in foundation, you may be studying difference between receipts and payments account and income and expenditure account. Receipt and payment account is nothing but cash book only. Cash book is very reserved or plain person. Only one criteria, cash received or cash paid. But profit and loss account very complex. His nature is very complex. I felt it is like Bade Dilwale, big hearted. Because he is big hearted, he welcome everyone. Cash expenditure, welcome. Non-cash expenditure, welcome. Book adjustment, welcome. Capital loss written off, welcome. Rectification of errors, welcome. Because of this complex nature, this method become tricky for learning, but it is too interesting. Whichever method you do, the answer should remain same. So, direct method or indirect method, only which one will change? Operating activity. Rest all approaches, irrespective of method, will remain same. The major task is how to segregate the cash flows under operating activity, investing activity, and financing activity. That is only by definition. Definition is very clear. For investing activity, any activity alters your fixed asset or property, plant and equipment or long-term investment. Buying of them is an outflow, selling of them is an inflow. Any return from them also a investing activity. Then financing activity. Any activity which alters your capital structure and return paid to them. Borrowing is an inflow, repayment is an outflow. Any return paid in the form of interest and dividend also a outflow. Operating activity, all cash and bank transaction which are related to principal revenue generating and residual activities fall under operating activity. We will go over some of the exam trap questions. First one, income tax. Income tax is the outflow of money. Tax paid includes advance tax paid, self-assessment tax paid, any arrears tax paid, any TDS on operating activity, refund of income tax is an inflow. In general, income tax is an operating activity unless it gives specific information like tax paid on capital gain, then it will be presented under investing activity. Dividend distribution tax paid, it will be presented under financing activity. If you cannot classify correctly operating activity or investing activity or financing activity, entire income tax paid will be treated as operating activity. Second point, purchase of a building for 50 lakhs and equity shares issued in consideration. Dear students, whether it is an inflow or an outflow, whether it is an investing activity or a financing activity, if this is the case, what will you do? Read the transaction once again. Sir, some students say it is a combination of investing and financing activity because purchase of building is investing activity and issue of equity shares is a financing activity. So how to categorize this? Please try to understand. This will not come in cash flow at all. Why sir? Where is cash flow, my dear students? There is no cash flow. So whenever you have peculiar points in your exam, I will tell you one easy technique. Pass general entries in your mind. What is the general entry for this transaction? Building account data to equity share capital. Where is cash? Simple. If in the debit side or credit side, cash is not appearing, this will not come in cash flow statement. Conversion of debentures into equity. Non-cash transaction should be disclosed by way of notes to statement of cash flows. To come in cash flow, either cash should be on debit side or credit side. But there is an exception to this point, acquisition of stock. Third trap question, cash withdrawn from bank or short-term marketable securities, short-term investments sold. Dear students, we will write in operating activity or investing activity or financing activity. The answer is nowhere. Remember simple, cash and cash equivalent category, any transaction which is increasing one item that falls in cash and cash equivalents, which reduce one item in cash and cash equivalents, it will not be disclosed in cash flow statement in anywhere in investing activity or financing activity or operating activity. Cash flow statement is reconciliation statement between opening and closing of cash. Third trap question, interest and dividend. Operations of financial companies, banks, NBFC, loans given by bank or financial enterprises is an operating activity to them. For example, Bank of India is giving loans, that is their operations. When a financial company pays interest, it is a operating activity. So interest paid for financial company, operating activity. For other companies, financing activity. Interest received, financing company, operating activity. For others, investing activity. Dividend received, finance company, operating activity. For others, investing activity. Dividend paid for finance company, financing activity. For other companies also, financing activity. Extraordinary items. If there are any extraordinary items of cash received or cash paid that requires a separate disclosure in cash flow statement, also in the respective head. Suppose it is extraordinary item relating to operating, then it has come under operating activity. If extraordinary item relating to investing activity, example, insurance claim received against loss of fixed asset by fire, it is an extraordinary item related to investing activity, then it has to come under investing activity. If it is related to finance, in the same way it is supposed to be. Next is trap question. This question was asked twice in exams. Can I report cash flow statement on net basis? The answer is no. So what is the meaning of cash flow on net basis? Example, let's say machinery purchased for 20 lakhs. Is it an inflow or an outflow? Outflow. Then furniture sold for 5 lakhs. Can I say investing activity 20 lakhs minus 5 lakhs 15 lakhs? The answer is no. Net off is not allowed. Machinery purchased outflow should show separately. Furniture sold inflow separately. You cannot net off. Reporting cash flow statement on net basis is not allowed for normal enterprise, but for financial enterprise it is allowed, that too in specific circumstance. Bank overdraft. Dear student, is it financing activity or investing activity or operating activity? Generally, while solving the sum, many of them following it as loan or financing activity. Correctly speaking, there is no guidance in AS3 with respect to bank overdraft. But even though there is no guidance accounting standard 3, there is very clear guidance in Ind AS 7. As per Ind AS 7, bank overdraft is not a loan. It is a part of cash management. If I need money, I will get from the bank. When I get cash from customer, I will deposit. It is not a specific loan. So bank overdraft is a part of cash management. It should be considered as cash and cash equivalent as per Ind AS 7. As there is no guidance in AS 3, we should also consider cash and cash equivalent. Now, let us see the format of cash flow through direct method. Heading cash flow statement for the year ending. 3 columns, particulars, amount. Give the heading cash flow from operating activities. Cash sale inflow, collection from debtors inflow, cash purchases outflow. Write in brackets. Bracket indicates cash outflow. Payment to creditors outflow. Payment for expenses outflow. Receipts minus payment will get cash generated from operations. Less income tax paid will get cash before extraordinary item. Add insurance claim will get net cash flow from operating activity, right in bracket A. Next, give the heading cash flow from investing activities. Sale of fixed asset inflow, sale of investment inflow, purchase of fixed asset outflow, purchase of investment outflow, dividend received inflow, interest received inflow, net cash flow from investing activity, right in bracket B. Give the heading cash flow from financing activity. Below that, write down issue of equity share or preference shares inflow, buyback of equity share outflow, issue of debentures inflow, redemption of debentures or preference shares outflow, dividend on equity share or preference shares outflow, interest on debentures outflow, payment of corporate dividend tax outflow, cash credit taken inflow, cash credit paid outflow. You get net cash flow from financing activity, right in bracket C. Net increase in cash and cash equivalents A plus B plus C should be equal to D. Under A you have receipt minus payment. Under B you have receipt minus payments. Under C also receipt minus payments. A plus B is nothing but aggregate of all receipts and payments is nothing but difference between opening and closing. What is D? Difference between closing and opening cash and cash equivalents. Opening cash and cash equivalents, right in bracket E. Closing cash and cash equivalent, right in brackets F.